Okay. Well, I would like to bring this meeting to order. New business, review and approve annual audit report for the fiscal year ended June 30th, 2021, prepared by James W. Wadman, CPA.
Okay, here we are
Here
again.
we are.
You know, when I was putting the presentation together this morning, we were here on April 20th last year.
Just a year.
Yeah, well, actually, I think we were all electronic. I think we did a Zoom presentation.
Yes, that's right.
I'm
That's right.
sure we weren't actually here. But there's been, many years that we've been here at various times presenting your audit, and the audits keep growing in terms of thickness, although I think this year stayed about the same this past year. But we've got some more changes coming in next year related to lease disclosures that are gonna add more
Paper.
pages to the reporting, more note disclosures and so forth, so. But we've got your report here, it's 85 pages. Again, I think it's about what it was last year. The bulk of this is required disclosure that the Governmental Accounting Standard Board, puts forth their statements that we have to keep up with and implement as they become applicable. And the big changes we've had that we've been dealing with for a couple of years now have been related to retiree benefits, whether they be pension disclosures or life or health insurance disclosures, and just pages and pages of notes are included here as a result of that. But we'll work our way through the report and talk about some of the highlights because there are so many pages here that we want to kind of bring you attention to some of the more important information. Pages 1 and 2 is our opinion letter on the financial statements that follow. You have an unmodified or a clean opinion again this year. Now, the fiscal year ended June 30th of 2021. And it's here where we express, basically stating that your financial statements and the related note disclosures are a fair presentation for this past fiscal year's operating results. Now, following the opinion letter on pages 3 through 9 is the management's discussion and analysis. And this is just kind of a narrative summary of the financial highlights. I want to just point out a couple things in this information. In the middle of page 3, the fund highlights paragraph talks about your ending fund balances. The town's ending fund balances $14,493,199 of total fund balances for the year ended June 30th, 2021. And of that amount, $3,778,672 is the general unassigned fund balance, or what you may refer to as your surplus. And that's slightly over 20% of your expenses for the year. So what we've seen with the towns that we audit is that fund balances have grown this past fiscal year. And it's, and a lot of it has been, COVID related for various reasons. But, what we've seen in many cases is revenues have been strong because tax collections have been strong, both in terms of property taxes and excise taxes on vehicles, and have been very strong. Anybody who drives by our car dealership now can see how empty the lots are. And so because the vehicles, everybody's not everybody, but there are many new vehicle purchases resulting flowing through to the town with increased excise tax revenues with the new vehicles being purchased. And again, property tax collections as a whole have been quite strong. People have had money and been able to pay their taxes in a more timely fashion, may be able to clean up some back taxes and things of that nature. So it showed strong results on the property tax end, and then on the expense, and in many cases, not as much money is being spent for various reasons, whether projects are put on hold or things aren't operating as normal. So expenses in many cases have been below budget. Revenues in many cases, well above budget. So shown, strong financial results is what we're seeing as a whole. And there's no exception here for the town of Rochester. So then again, this pages 3 through 9 kind of summarize some financial activity, this condensed financial statements, a few pie charts and things of that nature. Page number 8, I want to point out, is a good place to look at some of the operating results, budget versus actual. It kind of goes into some explanation as to why various revenues and expenses were above or below budget for this year. Talks about a lot of the significant variances for this past year. Financial statements begin on page number 10. And if we look at the balance.
Excuse me,
Yes,
on page 8, were there any that stood out to you especially that you would want to remark on?
Well, I think, we always talk about on the revenue side, I talked already about the tax end of things, property and excise taxes. One very common negative on the revenue side has been investment earnings, interest earnings particularly, because interest rates are extremely low. And so there's been a large drop in interest earnings for governments, for everybody. But often we're seeing that come in well below budget because, the municipalities have a significant amount of money that they may have in various banks, but with the rate drops that we've seen, then they're not meeting budget on that end.
Right.
On the expense side, is there anything that comes to mind, Kelly, that was significantly?
I think the highway department had a huge savings. A
Mhm,
lot of that contributed to the miles winter,
mhm,
and just some projects were delayed just because they couldn't get them done.
yeah,
Contractors.
yeah.
Yeah, and you'll be looking down through this, you'll see the word COVID a number of times, it's
Mhm.
talking about the COVID effect on a lot of departments.
Mhm.
Because things may have been not operating at full capacity for various reasons. So,
I think the Marina was also a big.
Yeah,
had a big
Mhm.
impact.
yeah.
now, on the financial statements, I'm going to talk about pages 10 and 11 together. This is a balance sheet on page 10 and a statement of activities or an operating statement, an income statement, basically on page number 11. And they are government-wide financial statements. They're required to be the first financial statements that appear according to the GASB's, the Government Accounting Standards Board's requirements. The government-wide statements, we're basically pulling everything together and with these statements, and we're giving a presentation that is comparable, or supposed to be similar to the for-profit sector. So where historically governments operate on a, really looking at their liquid resources. With these government-wide statements, what the GASB has said is we want all of your assets listed here, not just your liquid assets. So we want all of your town-owned land, buildings, town-owned roads, larger pieces of equipment brought onto your financial statements. So it really inflates the assets here. But the majority of these assets are only, valuable to the town of Mount Desert, for example. They can't be used and turned into a liquid fashion in many cases to be able to pay bills with, pay payroll, whatever the case might be. So again, these statements are here and the numbers are significantly larger than you'd see as what you have to operate with for paying bills and so forth. And then in the liability section in the middle of the page, we have some of these post-employment benefits, the liabilities related to those included for pensions and retiree health and life liabilities too. And these can be some very substantial numbers as well. So again, they are the required statements that show up here in the first two statements you see. They're really not as useful in my opinion, as the statements that follow, beginning on page 12 and through the remainder of the financial statements. So if we look at your balance sheet on page 12, you know, we've got total assets for the town for all the governmental funds. So this doesn't include the marina, but all your governmental funds, if you look at the far right-hand column, 19,660,000. We compare that to the balance sheet on page 10, the government-wide balance sheet. Total assets are over 61 million because of all those capital assets being included over there. So now when we look back at page 12, when we look at a balance sheet, it's like these are assets that are in a liquid fashion. They're cash, they're investments, they're receivables in the forms of taxes, liens, or other types of receivables where you're either going to receive your cash collections on these, or you might, you know, in some cases, you may foreclose on a property and receive your funds that way. But again, these are not things that you're going to be recognizing over years. They're in liquid fashion now, and you have the ability to pay bills with them in the near future. The profit and loss statement that follows, again, is going to follow your budget format. It's going to follow your internal accounting, whereas the income statement that we looked at on page 11 has long-term activity in it as well. And some of the major differences here is the income statement on page 11 also has factored into the expenses estimated depreciation on the town-owned assets. You won't find that here on this income statement on page number 14. And another major difference is debt service. When you look at debt service here on page number 14, it's $2,214,650, right about exactly in the middle of the page. Okay. When we look at debt service over on page number 12, we are only looking at the interest portion of it. But here on page 14 and through the remainder of the financial statements, debt service is something you budget for in its entirety. You budget, you know, not only the interest portion, but you budget that we're gonna retire a portion of the principal too, and that's an expense to the town. Whereas in this government-wide format that we looked at earlier, you treat it like you do in a business. So there's that can be a significant difference here as well. Anybody have any questions on that before we continue on? Okay. The following 3 pages are the financial statements for the Marina Fund. So we've got a balance sheet on page 16 showing the assets and liabilities and the equity for the Marina Fund. The operating statement on page 17. And then we have on page 18 a statement of cash flows, because the Marina Fund is what's called a proprietary fund. So anytime you have a business-like activity, you also include a statement of cash flows. You're required to do that too. Notes to the financial statements begin on page 19. They go all the way to, I think, page 55. Yeah. So, you know, we've got like 36 pages of notes to the financial statements.
Yeah.
And those have practically doubled in size in the past couple of years, as we were required to bring on all of those disclosures related to the post-employment benefits for pensions and health and life insurance and so forth. So there's many pages here, but there are a couple of pages that I wanted to point out. Page 24 is, and this comes as a result of GASB statement number 54 that we had come into play a couple of years ago. And this is kind of a nice summary of the town's fund balances. So you've got on the very bottom line on this page, the surplus we talked about, 3,778,672. But then up through here, you've got all the other various fund balances that the town has, that total up that 14,493,000 that you have in total. So the pages continue on with the note disclosures talking about each and every debt that the town has. And then beginning on page 36, going all the way through page 55 are all of the required disclosures related to the pension liabilities and all the assumptions that go into doing these computations for the pensions and the life and health insurance liabilities. Then we pick up again with page financial statements on page number 56. One of the more useful financial statements here, which is for your general fund, the general operating fund, your budget versus actual operating statement for the year. And so we can look in the variance column on the far right-hand side and follow that down to the bottom line. We have overall a favorable budget variance of $803,027. Okay, the budget for this operating year was to reduce surplus by $500,000. When all the actual operating results are in, you increase surplus by $303,027. So there's that favorable budget variance of $803,027. And and then looking up at the revenues, they came in $148,762 above budget. Your expenses came in $654,266 below budget for that, combine those into that $803,000 favorable budget variance. The next few pages that follow are required for pension and the other post-employment benefit disclosures. And the notes that go with them. Again, these are practically double the size of the reports. And then beginning on page 65, we've got budget versus actual revenues and expenses. And those, these kind of fall in line with page 56 that we were just looking at, but it just takes the revenues and expenses and breaks them into more detail. So you can see in more detail where your favorable and unfavorable budget variances were. Page number 69 is statement of changes in unassigned fund balance or surplus. And it basically just kind of pulls together what we were looking at over on page 56. The favorable budget variances minus the $500,000 that the town used to reduce taxation, or a net increase in surplus of $303,027 in a year that you budgeted to reduce surplus by $500,000. And then the pages that follow are your other funds in more detail. Your capital projects funds, your reserve funds. You can look at the operating results for those for the year. Typically, we'll focus more on your general operating fund. For example, over on page number 82, we've got all your capital improvement funds broken out, showing the beginning and ending balances and the additions and subtractions from them for the year. The very final page, 85, schedule of expenditures of federal awards that we're required to include. Basically, we're required to have this here for the benefit of the state Department of Education. They require whether or not you expend over $750,000 of federal funds, the Department of Education requires that we include this particular exhibit. If the town expended over $750,000 of federal funds, we'd have another 10 or 12 pages of reports on internal control and compliance and additional procedures we would have had to perform on your major federal award programs. Since the town, which includes the school department, was below $750,000 this year, we didn't have to do that additional field work and reporting, so. But in this year that you're in right now, you may be above 750,000. And so we may have some additional reporting and, you know, to the Department of Education, to the Federal Audit Clearinghouse and so forth. That all depends on that expenditure threshold for a year. So.
I have a question for you. On page 69, when you were talking about the, that we had a larger budget surplus than we required to cover that 500,000. When we go to town meeting and ask the voters to vote on that surplus, where does that number exactly come from? Because we see now, would this 300 then carry forward and we could include that, or would we have to just sort of assume, how does that work?
So, okay, so if you look at the top set,
Yeah.
the top, so you started the year July 1st of 2020 with 3,475,645.
Yeah.
Right. You immediately reduce that by 500,000 because that's what you voted
Right.
in that town meeting, was to use 500,000 of that. So that brings you down to 2,975,645. And then you add in these favorable operating results for the year to bring you to that ending 3,778,672. So that's where you were sitting as of July 1st of 2021.
Right.
From that, you reduce whatever you voted in your last town meeting. Maybe it was 500,000 again, you recall what it was?
400. No, it was 400. Jake, what was it?
Well, this is related to the 2021 town meeting, right?
Correct.
Yeah.
How much?
So we're proposing that we do 700,000 from fund balance this year, and that was based on a conservative estimate of fund balance, undesignated fund balance being 3.5 million. I figured it would come in a little bit higher, so this is right in line with what we were thinking at the time that we made that proposal.
Yeah.
Great.
So when you had your town meeting back in May of 2021, you would have voted to take X number of dollars, I assume, out of surplus to reduce taxation. So that would come into play. You know, we'd start with this 3,778,672 minus whatever you voted in May of 2021. And then you would add or subtract whatever your operating results are for the year that's about to end in about 6 weeks.
So he sees it coming and makes a judgment on that, Jake, I mean. Frankie.
Correct. Correct.
And makes a judgment on what will be the likely scenario.
Exactly.
And so this 300 would carry forward though into the.
It does,
Yes,
yes, it
yeah.
gets rolled, it's part of that 3,778,000.
Okay,
Yeah.
thank you.
So. I think that's everything we have. Or if you have any
Sure.
other questions?
I do. This is a silly question. Do you input this electronically? Does it go to some government agency
So
that
this
reviews it?
goes to the State Department of Audit electronically,
Mhm.
and the State Department of Education, because you have a municipal school department. It goes to the State Department of Education.
Mhm.
And then from there, we also provide you folks with electronic copies to send to whoever else might need one. But those are the two parties that we will automatically submit your audit to.
Mm.
If in this year that you're operating in right now, if you exceed that $750,000 of federal expenditures, we'll also submit one to the federal government.
Mhm.
Mhm.
And that is required to be submitted by March 31st. It's 9 months after your year ends. It's required to be submitted to them.
Yeah, I guess what I meant was, do the individual figures here get entered into a database that can be crunched for accuracy by some sort of enforcement agency, like so when I file my taxes with the IRS, I don't think that they have a bunch of guys sitting around going through my paperwork. There must be a faster way, more efficient way to deal with that.
Yeah, I mean, these go in a PDF format to the Department of Audit and Department of Education. And I think they have a little check the box that it's here, and that's it. It doesn't go, it's not like it goes electronically into a computer system there. Now, the Department of Education has, you know, like schools have like a uniform chart of accounts and coding, and everything gets uploaded to them on a regular basis, like a quarterly basis. So they get things in that fashion, like you're talking about, for the school department. But there's no such mechanism for the towns.
So the only reason that somebody would be going through this was if something turned up and they wanted to look it over. Is that right? Or do they just
yes.
randomly look at them?
They just basically, they take them in and they keep an inventory of who we have and who we don't.
Yeah.
And I mean, the Department of Education is quite strict with their enforcement of that. If you know, the audits need to be in by December 31st to them. If they don't have it, then an extension needs to be filed. And if you don't meet your extension deadlines, then they will start to withhold your monthly education subsidy.
Wow.
If you know, if your extension runs out and you don't keep your extension active, so. They're quite serious about it.
It's not an important question, but I'm just curious personally. Well, we talked about motor vehicle excise tax being up. Is that based solely on MSRP, or as we know nowadays, people are paying oftentimes over MSRP? How is that calculated? What they pay in excise tax?
Well, yeah, I mean, you're still bringing in your window sticker when you register your
Right.
vehicle.
So that's, I was wondering if that's,
Based on that.
even if they have a dealer adjustment fee
Right.
of $2,500,
Right,
it's
yeah,
probably
if
based
you're paying
on
a premium, it's still being based on.
the MSRP.
Yes.
Okay, not what a lousy deal you got. in the
Right.
first
That's
place.
right.
Okay.
Yeah,
All
don't get into a bidding war and pay even more.
Part of the increase too is they delayed people from registering their vehicles last year. Then they had to
good point.
register them all.
That's right.
Fiscal year.
Oh,
So you're gonna see a huge jump because of that too.
Well, it's been a crazy few years, hasn't it?
Yeah.
well, great. Thank you very much.
Thank you.
Thank you.
Yeah.
I wish I had more intelligent questions to ask, but it looks, we're in better shape than we were 5 years ago, I think.
Yes, we think back to the years of the pages and pages of management letter comments. It's nice to see that,
Yeah.
that go away. You know, I think the biggest issue we've been running into with, you know, we talked about this before the meeting started, is schools, books closing, so that we can get those done, and we need to tie things together, and it all needs to pull forward into your town audit. So,
Yeah.
that doesn't seem to be getting any better, unfortunately. You know?
Jim, on that, do you have any thoughts? Because that is a real concern of mine as well. I guess about what we could be doing. I know in the past, the school and the town have operated almost as distinct entities, even though they're not. And so I'm interested in seeing where we can bring those together. But I'd love your input on where you think we could make the first strides.
Yeah, you know, I mean, what we see from the school, and Kelly, you can, you know, add anything to this that you see, because you work in there on those audits, is what eventually comes out of there. The quality is very good. The timing, it seems to be getting further and further away every year. So in other words, when these books are finally closed and ready for us to audit, they're in very good condition. But it just seems to be taking longer and longer for that to happen. And it appears that they are shorthanded in that office.
Yeah.
And they are, as you say, Jake, they're part of the town, but they've got this reporting they have to do to Department of Education. They can't really do their own thing. They have to follow their uniform accounting system and do all their reporting. And then you throw in all these new grants that they have, and they have timelines where they have to spend this money or they potentially lose it. And it just seems to be getting further behind
Right. They've got,
all the time. And
So this is
Yeah.
coming out of the superintendent's office? Yeah, see, they're not part of the town, but they're handling the elementary school, which is part of the
Yes.
town.
right.
So I'm not gonna suggest that we deal with their accounting because it is part of the town, but there's been a little tug of war there.
It's, you know, yes, it's part of the town, but they've got their own, you know, electronic reporting. They've got all of their filings they have to do
Mhm.
with the Department of Education. In a number of cases, they might have consolidated grants that are applied for and awarded on a like a union-wide or an AOS-wide basis, you know, so it's like, all right, you get this chunk of money for a particular program on a AOS-wide basis, and then it has to be distributed out to the 10 different schools that are part of the AOS, and then the expenses have to be properly charged up against that. That's one thing we were seeing
Jeez.
too, and correct me if I'm wrong on this, Kelly, but like money, so they get a grant for a specific project and they spend the money, but it doesn't get charged up to the grant initially. It maybe gets charged up in the general operating fund. And now they gotta go back and they gotta move those expenses up against the grant and show that we spent the grant. And they're just, you know, I just think that they are shorthanded there and having more put on their plate all the time.
Yeah.
right.
Um,
Like for the grants, like any salaries, like if it's employee of, say, Mount Desert Elementary will get charged there, but Harbor Elementary will get charged there. Then when you do the grant paperwork and stuff, you've got to bring it all together and report it under one grant. There's a lot going on. I think they were overwhelmed with all the grants they received this year.
Yeah.
They're definitely short-staffed.
And
They can-
and we would run into cases where you got this money, you didn't spend it.
Right.
You know, you've got the revenue sitting there, the expense lines are all zero or close to it, and they're like, no, we did. But the money didn't get charged up there initially, so we gotta go back and fix that.
Oh, gosh.
And so, and like I said, when it finally gets finished, the quality is there, but it just seems to take
Yeah.
forever, and it just seems to take longer every year. And I know that's not a good answer, Jake, you know, not a solution, in other words, but that's kind of
No.
the issue that we're seeing, so.
That is helpful. Do you know on the monthly reports that you're talking about, what is the turnaround on those? Are they remitting those timely?
Yes, they are.
Okay. Because it seems like maybe if we could have access to those, then we could model the basics of their accounting in our system to be able to provide 80-90% of what y'all need come audit time, and then they can fill in the gaps. That's kind of the model I've been toying around with.
It's, you know, that's possible. It becomes so complicated when you start talking about federal funds too. We need to be able to know, as we get into these audits, how much federal money did you spend this year?
Right.
And you might look at it initially and say, we didn't spend $750,000, which is the threshold where we have to do this additional field work and reporting, because there's money that was spent on a program, but it isn't charged up to that program. So we start to compile the expenditures for the federal programs. And it's like, okay, we're at 685,000, but then we find out that, well, no, we really are higher because the expenses weren't charged up in the proper place initially. And so then You know, the finance director there in the superintendent's office, I think she has to do a lot of this herself.
She does
And-
all the grant stuff.
You
Oh,
know,
my
and go
goodness.
back
Oh, yeah.
and get
That's
these.
why, that's a big.
Yeah,
And they've got, and the human resources, they're short staffed.
yeah,
Yeah, they are.
yeah. So, you know, bills are coming in, bills are being paid, they're being paid on time and everything, but they're not being charged up
Yeah,
to the appropriate programs. And so then she has to go back and fix them.
Mm.
And
And then you've got the 10 schools you're gonna tie in. A lot of times they'll run expenditures through the high school or the AOS and then have to distribute them through all the other schools. And they've also got a separate grant reporting system where they have to submit to the state for reimbursements with all the backup of their expenses.
yeah, so they have to go back, you know, they might have charged up a lot of expenses for a program through the high school, for example. But now we gotta go back, we gotta bill the other 9 schools for their share of this. And get paid, you know, and get that onto warrants and get paid back and so forth.
They do a good job for the most part getting it all done, but sometimes it's at the after year end, they're trying to clean up their stuff before audit. To make sure that that account is reconciled and dispersed in the right schools.
Oh,
I'm glad I
that's
don't
not
have
my
to do it
job.
I think
myself.
the best solution would be some additional high quality personnel in that office to be able to
Yeah,
help the finance director.
everybody's having an easy time hiring these days.
Right, right.
Right. And I was told, once the finance director decides to retire, they're gonna need at least 2 people to
I
replace.
think-
Oh, yeah.
I think so.
At least.
I think she had planned to retire a few years ago
Got sucked back in.
I had to stay, yeah.
and,
I think you are right.
yeah. Well,
Well,
Thank
thank you very much.
Thank you.
All right, thank you for having us, and anytime any questions arise, feel free to contact us.
mhm.
We appreciate it.
We'll see what this next year brings.
Yeah, optimism.
Okay.
Well, thank you all.
Thank you.
Thanks.
Nice to see you.
We're gonna do some warrants and we can
Yeah.
close this up.
Okay.
Good to see you.
Thank
See
you.
you
We
too.
really see you.
Take care.
Bye-bye, thank you.
Bye.
Okay, treasurer's warrants, town invoice AP 2260 in the amount of $98,317.40.
Move approval.
Second,
All in favor?
his last motion.
Oh,
Your last
Oh,
motion.
you can move to
You
adjourn.
can, yeah,
Oh, it was just, wow, just that one.
yeah.
Yeah,
Motion to
I
adjourn.
motion to adjourn, yeah.
Second.
All in favor?
Does anyone ever
Oh,
vote?
we're gonna miss you.
Are you still gonna come to BOS
Oh,
meetings?
all the time. No, I'm gonna submit I talked to Claire, I'm gonna submit a volunteer application for the Economic Development Committee, so I can stay on that.
And vote.
And yeah, and so I promise when I submit that in a couple weeks, it will be legible, so you can read it.
Thank you. Thank you.
And then actually, the other thing, it got me thinking
That's
about
pause. You don't want